What's going on, everybody? Welcome back to Foxhound Finance, where we analyze the stock market using technical analysis. Please understand that I am not a financial advisor. Nothing in my videos is financial advice. Please do your own research and buy what you want to buy. All right, guys, I'm back again with another update, and this time in a weekly fashion versus our typical bi-weekly schedule. So I'm going to try to continue that going forward. Hopefully, we can keep the momentum. Today, we are going to cover AMC once again and the price action this past week here. So, as we always do, I'm going to go over the structure real quick because I know we have new members joining every single video. So, I will catch you guys up to speed quickly and hopefully the quick 60-second highlight update. All right. So, in front of me, I have these three or four red resistance lines that we must break if we're going to see that impulsive price action to the upside again. All right. And to my left here, I have it originating from this point right here because it was the catch of the knife. Again, still rejected all the way down. But that is a key point of a reversal attempt that I have drawn out here. And also this flat level that I believe we must break. Now, in the comment section, people are somewhat getting negative here, I would say, about my prediction on how this is going to look. And so what I'm showing people, and I will look at later, is the progression up to that level. I'm not saying that this level at 13 bucks right here is the end all be all squeeze or whatever topping point. That's not what I'm saying. And I even referenced HYMC and its typical progression and pattern and how similar it is to AMC, except AMC is obviously behind as HYMC had its like squeeze melt up move. So I pointed that out. I'm seeing another rounding bottom setup, but again, how are we going to get there? What's it going to look like? How long is it going to take? I have a very slow route to it, which is over the course of a year. And then again, I will be covering the more impulsive jumps. Okay. So please understand that I'm not saying that 1370 is it. All right. But you have to break this level if we're going to go attacking these gap fills here to my left. All right. And why it's so important to break this level is because once you break this level, this price action to the left is a hot knife down. So there's no real resistance here, guys, is what I'm trying to explain to you. It's such a quick move that on the right side of it, when we come back up above the surface, we will start to have those big pushes back to the upside. Okay. So that's what I was explaining. But again, I was going to draw this whole thing out because, again, it only lets me go so far. Alrighty. So please understand that. That's what we're looking for in this overall structure and progression is breaking these resistances. And obviously, we've already done that if you've been following me this long. Down here, you see we have the 93-cent level. We broke the 1188 back here by default because it was just sharply descending. We went sideways, and then we attacked the 556 resistance line that was built back here. And we did break that pretty handedly. So then I drew that structure out here to show you what this could look like moving forward on the slower side of things. This is the slow route, all right? So that we at least have a more patient outlook if we're not going to get this big, giant, impulse move to the upside, all right? And so far, if I update the tracking, I have not moved anything. You can see it right here. Still tracking pretty decently. It's not going to be as fine as these lines, the way the candles will be, but nonetheless, there you guys go. So that is our tracking for the week of the slower side of things. Now, with that being said, what I'm seeing here is sort of like that M pattern formation again. And I'm going to take you back to the 1188 impulse move that we had back here. So I'm watching this pattern right here as well. This is also in play. Okay. So if we had this move right here, right, how this bottomed and then it moved up this way. If we're coming back down right now, if we're in this part where we're coming down, if I see this again where price action comes back up here and gets rejected back down, then I will feel pretty confident that we could have a chance at this again. This is a 500% move. But again, I'm not falling in love with, history repeating exactly to the T, guys. But we have seen this before where you see similar sequences play out. So this is a 500% move right here. Okay. So if we were to apply that, and this would be a faster pace logic, obviously, it would blow past this, then, you would come up right here, come back down as we are moving back up to the $2 range, and then again, possibly back down to $1.31, somewhere in this region, right? It'd be up like this. That's how I could see it forming. Okay. In fact, actually, now that I see it side by side, this divot right here down would be this push here. So that'd be that push there. Then you would come down and then yes, up, down. Okay, I have that correct. So it's a funky looking M because this right here drops so steeply, but the M is really, if you were to cut this off right here, you could see it like perfectly right there. That's what I'm looking forward to. Not that we have to come back down here to that level of 93 cents. Okay. So we'll see how this forms if we get the M that plays out and then the impulse up. Now, what's the target going to be if we get the 500% move from this $1.30 level, we'll say? Well, if we plug this in, do 5 times 1.3 roughly, you're looking at $6.50. And again, why is that so important? Well, if you were to impulse off this level here at $1.30-ish, then look at where you would be. Just breaking through this resistance. You would come up through it, possibly right around this region, right? 650, I think I said. Might even be rough just past it. But, you know, we'll say $6, $6.50, somewhere in that region. So that would break you through the resistance. Now, what is it going to do when it gets past the resistance? Will it get pulled through all the way back down? Or will we come back up and then retest this resistance and then keep moving forward? That's what I'm looking out for. All right. And that is the faster version of this. All right. That you get that M pattern repeating and then you go up. The other side of that is if it's not going to be an exact 500% move, but we actually are going to go up to the nearest resistance and test it, right? Take a shot at this 560 level, right? If we take that shot up there, we will also be paying attention. Do we just reject here and then get moved back down before we, you know, do our little side to side slow progression and then break it for real? So that's what I'm looking at, because after you break this resistance here, guys, you would have that shot to that 1374 level. And that's kind of why I had this drawn out the way I do. Because if you see how long this pennant and resistance is set out for, you have to take into account the space that you have to trade in here. So I'm telling you right now, if we're holding this support here and moving, well, look at the space that we have to trade in. So that's why I'm saying it could take longer than we're anticipating if we're not getting the super impulse move to the upside, right? So hopefully that explains the structure and the layout that I have drawn for you guys, all right? And let's take a look at the pivot points, all right? And this here too is also looking really, really good. So again, we are riding right on top of the blue pivot line, the median here. So candles are holding right on it. It's pretty steady. I will be paying attention to those as well to see if we get candles to break below, because obviously if we do, well, then we may be coming down to test the red resistance line here at the S1 level is what I'm thinking. All right, and that would put us like 103, $1 to 103 in that range if we come down and break through this pivot point line. Okay, so giving you those couple scenarios there to see the downside and the upside, the slow side, the fast side. So that should help you guys a little bit see what's below us. But if, again, we are printing candles above, this would bring us up to at least R1 at $1.98, and that would be perfect matching for that M impulse move. If we go past that and the M move is out of the question, well, then we're back on the slow track sequence, right? Depending on how fast it goes up. But you would have R2 at 242, and then you would have R3 at 291. All right, so those are the upside targets, at least for May, just off the pivot points, okay? Those are resistances that we must break. So there you have it for your pivot points. Let's look at our EMA bands. And again, the EMA bands are starting to go more sideways, like consolidating, versus this downside look. So this right here, even though, yes, we've seen the price action come down, your EMAs are now in position over a day or two of trading to cross back over again and give us those impulsive moves to the upside. So this is actually looking better than ever, guys, these EMA bands. All right, I'll be paying attention if they obviously curl all the way back down again. That's not what I want to see, but it would just show me again which scenario we are headed towards, okay? And again, somebody made a comment about me calling out all scenarios. Yes, A, B, C, D. That's how I operate on this channel. so that we are ready for anything. All right. Because most people, option A doesn't happen and they get depressed and disappointed and anxious and they're freaking out. So this allows you to have all scenarios covered and you can just jump intermittently between which ones are tracking. And typically they're going to be so far deviating from each other, it's going to be pretty easy to tell which track we are on. So EMA's looking very good. RSI, right here, we got the sell-off, right? So we're cooling down on the RSI, which again sets you up for more fuel for the bigger move, right? You can't be riding overbought territory, right? Unless we're in the full-blown end-all be-all part of this move, you're not going to see that typically. You're going to cool off. And that's exactly what we're doing on the RSI. Looking at our MACD indicator. So on the daily, there we go. Yes, we had the crossover down. I told you before, with all this bullish volume, we broke out. It passed the histogram bars right here in green. Now we're curling down. And again, even the sell volume is very even. So again, that's very positive. If we look at our quarterly, the massive time frame, you could see right here, guys, that that crossover is still ready to happen, I think, going into this next end of this next quarter. I think it's very possible. We just need significant price action, obviously. Like if we get those impulse moves up and it holds, that's going to cause, I think, this MACD line to cross over the signal line and give us that push over, which could then trigger the scenario where we have that massive squeeze to the upside right over here, like we did before, right? When the MACD line crossed over the signal line, we got the January-June combo back to back. That was over 6 months that we got bullish price action, okay? So if we are doing that again, we are definitely set up for it. As you can see, the MACD bars here on the bearish side are fading really heavily. I mean, they're faded all the way down here to the point we're about to flip bullish on the MACD on the quarterly for the first time since September 2022. And mind you, this is when we were dying off in volume, okay? But when we flip bullish on the quarterly, it is huge. It is impulsive. So again, I'm throwing that scenario out there for you guys because I know my Super Bowls out there are looking for that too. Again, it's definitely on the table. I'm not hating. I'm just saying I've been in this game for a long time, right? Since the very beginning. And I'm so tired, and I got tired of looking for the big move every freaking week. And it just wasn't happening. And everybody was selling that idea. So that's why I did all this research and learned as much as I possibly could, you know, putting as much information in my brain as I could handle so that I could learn this stuff myself because I was tired of the hype beast out there. Okay. So those are your scenarios with the indicators, guys. It looks very good. Even if we're tracking slowly, you should note in your mind that price action is going to continue to go up and up and up instead of down and down and down and down, even if we are following this scenario. Okay. So I hope that paints it a little clearer on that structure side with our indicators. And lastly, the VP, it's sitting right here. This is our VP fixed range tool. Again, this big bar in the middle, guys, 1.02 billion in volume. It is the most significant volume and resistance. So price is being attracted up toward it like a magnet. And also it is going to be resistance when we get there. So we have to break this 273 bar, right? If we want to exceed up through this and continue. Again, when you break this, it could look differently, right? It could look the slow way or the fast way. It doesn't really matter. I'm going to be paying attention to that. Like if we get up to it and then come back down and then take another stab, I have it all mapped out, okay? So you will see which track we're on because pretty much if you break this, right, you'll see AMC just go boop right to the top if it's going to be the impulse wave type, right? If it's going to be the impulsive move, boom, you're going to know it right away. If not, and if it's taken its time and we're pulling back, well, then obviously you know that that's not the time for that move yet, all right? Again, I've explained this 100 times. This pocket right here, as you can see, when we broke this bar here, where there was major resistance down here stacked, we're now sitting right here at this bar. And if we can hold above this bar, look at the price action shot that we have. It's very weak in here. We can zip right up to this dotted line at 272. But again, 272 is going to be significant because that is where we're going to find out if AMC's bottom is truly in. And I say that because If we get rejected here and then this starts to distribute all the way back down and does one of these things again, well, then we know that this bottom obviously isn't all the way in. It's 93 cents, right? So again, I painted this out multiple scenarios. You guys should have option A, B, and C, and even D at your ready, okay? So that is all I have today, guys, for the price action this week. I think we covered everything that's significant, and also, too, it's only 15-minute video, so I'm going to leave it there because I don't want to get into the 25-minute videos, okay? So you guys, if you're new, subscribe. Please follow along with us because I think we're doing a pretty good job on the channel of mapping this thing out and seeing where we're headed, okay? And it should give you peace of mind because now you have all this laid out for you, okay? So guys, have a good weekend, all right? Try to go do something fun, relax. But again, I will try to be back here again in 1 week's time to give you guys another update. Thank you so much for following along. I will see you guys in the next video. Take care.